Weekly pivots. Somebody asked me at the break about weekly pivots. What you can do is you can calculate weekly pivots from midnight to midnight, like midnight Sunday to midnight Sunday for the entire week, where you just eyeball it and you get the open, high, low, close pretty much the way we did it just now. Same philosophy. The close would be the open on the Sunday midnight, and then you take the close on this Sunday over here, and then you eyeball the high and the high and the low in between, and then you calculate weekly pivots using the same calculator that we just did here. Just use the weekly numbers in here. And the advantage to that is you then have a daily set of pivots and a weekly set of pivots that you can use. And it's important because in situations where the gap between pivot points, daily pivot points, is wide, you could also be looking at the weekly pivots, which would fill some of the gaps. And the other thing is that sometimes you'll notice that price action goes way beyond the pivot points. On some days it's extreme and it exceeds the pivot points to the high side or exceeds the pivot points to the low side. It goes right below all support levels, or it goes way above all resistance levels. Well, the weekly pivots could be used in those cases to provide other buy and sell points. Okay? I like this suggestion here. This is from Hudson Lee, who lives in Australia on the Gold Coast. Is there such a place as Gold Coast, Australia? I think there is. This is actually brilliant. If you're trading Monday, the question is, where do you get your pivot points from? If you're trading the Monday session, do you use Friday's pivots or do you use Sunday's pivots? That's a question that a lot of people ask. And I never really had a good answer because I tell people to avoid Mondays. But what Hudson suggested is, oh, let's just read it. You can get a better reading on pivot points for Monday by calculating them based on taking the open, high, low, close from 12 a.m. Friday to midnight Sunday. You get the data from the 1 hour chart by manually looking for the highest high and lowest low during that time. The open would come from 12 a.m. Friday and the close would come from Sunday midnight, and then use the pivot calculator. Actually, there's an error on that chart that I have to correct. There's two words, highest high. So is that clear to everybody? Otherwise, if you don't do it this way, you have to take the open, high, low, close from Friday or Sunday from Monday, and which one do you use? And there are ways of working with that, and the way you work with it is if you have an extreme Friday and a narrow Sunday, then work with Friday. Or if you have a narrow Friday and an extreme Sunday, then work with Sunday. But it's kind of hairy-fairy. I like this one better because it takes the price action it really looks at price data from Friday all the way through Sunday, and I like that solution. Now, market hours. Most of you know this. I don't know that we need to go through this, but this slide will tell you when the various markets open, and it's in your package that's going to be mailed to you. This is the study that George Smith did on the various time frames. He did a study over a year's period. Don't ask me why he did it, but I'm impressed with his analysis. And he came up with the busiest trading times, irrespective of currency. And they turned out to be in here and in here, and actually this window was better than this window. You got more hits in here, so that's useful information for people who don't like to trade at night. And based on that information, Jeff and I got into a discussion at coffee break. You can recalculate your pivots at, say, 7 a.m. and 1 p.m. Eastern Time. And the reason I suggest you do that, or you can do that, is you can recalculate your pivots here and here. That doesn't mean to say the pivots you calculated at midnight are no good. It just means to say that if you were to recalculate the pivots here or here, you have a better set of numbers to work with in anticipation of the next session, okay? But you don't have to do it. You can still work with the numbers from midnight.
What are the numbers in the right-hand column?
Oh, this is on a ranking out of, I think, a scale of 1 to 100, how each hour ranked. Like obviously 4 p.m. is nothing, 9 a.m. is 28. It was just his way of ranking the hours.
Oh, okay, so the higher the number,
The more trades.
okay.
Okay. But you can calculate your pivots based on midnight to midnight, and that should do you for the entire trading session. The only advantage of recalculating your pivots after the London session or the New York session is, let's suppose you have a wild day like we had on Friday during the New York session. You probably would want to recalculate your pivots because of the extreme price action. Okay? That's all I'm saying. If we had lots of action in here, which we sometimes do, you'll have a very volatile session with the euro during the London session. You may, and you're going to trade the New York session, you may want to recalculate your pivots at 7 a.m. It's just recalibrating the pivots is all it's doing. You don't have to do it, but it brings you that much closer to the action.
So if you are recalculating the pivots at 7 a.m., you would take your opening price at 7, or?
You would go 7 to 7, 7 a.m., 24 hours to 7 a.m.
Oh, okay.
Always 24 hours. Here's an example of where you can trade based on trend line break. Here we had an uptrend right here connecting this swing point, these two swing points here. And when price broke through that trend line right there, that was a good spot to go short. That coincided with the start of the London hours right here. The euro tanked. And then it did a swing at the beginning of the London hours. You'll sometimes see that the euro does pivotal changes at those two time points. What I'm saying on this slide is just reinforcing that this major move started at the beginning of the London session, and you can see that it went up quite dramatically. Now, if you're wanting to convert GMT time to local time, this is how you do it. These are the formulas. It's done for you here in table form, and you don't have to write this down because you're getting a copy of this. What would you have done here? What do we have? What do we have right there? Hammer. We got a hammer there at a buy point, and we've got positive divergence here on MACD. See price going down, MACD waving up. I'd say buy. Okay, what would you do here? Why?
Spinning top, spinning top.
Boy, we got a spinning top, and we've got a double top, spinning top right there.
Get rejected at R2.
And it was at a resistance level. It was bumping up against R2, which is a sell point or a resistance level. What would you have done here? Hammer. We got a hammer there at a buy point. And we've got positive divergence here on MACD. See price going down, MACD waving up. I'd say buy. Okay, what would you do here?
I noticed that it will stay either north or south.
Let's talk about that. That's a good question. The question relates to average trading range and how it kicks in and when it kicks in. Let's suppose let's suppose that price action coming into the session is low and it's at the bottom of the scale. It's below the central pivot point and it's at a buy point at the very bottom of the pivot scale, okay? And you have indications that would tell you the price is going to go up, like maybe you've got a hammer spinning top, positive divergence. You can rest assured that your full range is probably going to head north and be captured all the way up through the buy area, through the pivot point into the sell area. And you're going to catch those 76 pips. Now, the reverse is true. Let's suppose coming into this session, the new session, we had a head and shoulders pattern the night before, or we had a symmetrical triangle in a downtrend. You know that we're going to have price weakness coming into the new session. So if price comes into the new session in the sell area above the pivot point, like this, and it's heading down, you know it's going to fall through the resistance area and into the buy area and keep on going to capture the 76 pips. The key here is the average range usually is fulfilled during the London hours. And it's either going to do this, or it's going to do this, or in some cases it does its full range up and its full range down. Or sometimes it'll do its full range down and its full range up. So if Don got in here, as Emily said, right about there, this mouse is difficult to use, right there, you'd put your stop 20 pips away.
Right.
Then when you captured a 30 pip run, you'd move your stop up to that entry point.
Exactly.
That's cool. Actually, would you move your stop up to your entry point or just underneath the pivot point?
Ooh, better yet. Yeah.
I would move it underneath the pivot
yeah,
point.
that's a good point. Move it up to maybe 5 pips below or something, so you don't get.
I'd say 5 pips below the pivot point.
Okay.
But sometimes it could come back against you when you're trading like that.
This is the disadvantage of moving stops up. I actually like George's example we talked about this morning, where he has limits at each pivot point, or if he's watching the screen, he will actually pull the trigger. If he sees price 5 pips within the pivot point, he will actually get out of the trade and then get back in when it goes through the pivot point. But I like that idea as long as...
I'm nervous because I'm new and I'm looking at so many things, trying to remember all of the rules, and did I miss something? But I feel like it's just a fail-safe
Sure.
now, and I may change that later when I'm more comfortable.
Yeah, sure.
But to get started, it gives me a level of comfort.
Don, whatever works for you, this is all about what works for you. And it doesn't really matter what anybody else thinks because nobody can argue with putting money in the bank. In this business, there are no rules. There are just lots of good ideas. And your strategy will be different from George Smith's strategy, and Vincent's will be different from somebody else. But there's nothing wrong with any of the strategies because the permutations and commutations are all over the place. But I like your idea. I would just put the stop on the other side of the pivot point. I think it's a great idea.
Is there something that will draw or overlay the pivot points on the chart?
That's a good question. The question is, how do we get the pivot points on the screen? At FX Solutions, all of the market maker brokers have a drawing tool where you can draw the lines on the screen. They're not all easy to use, but it can be done. That's how you're supposed to do it. But there's nothing wrong with printing off the Excel spreadsheet and having that as a handy reference while you're trading, because the most important thing that you want to know at any given moment in time is where is price in relation to the nearest pivot point. Because you're always asking yourself, how is price going to behave around that pivot point? If you don't have the line drawn on the screen, well, okay, it's not a big deal because you're only thinking about one thing, or two things, price and nearest pivot point. And then if price goes through that pivot point, then you're thinking about another thing. What's it going to do at the next pivot point? So don't get really hung up on the lines. But
Well, it's just will facilitate kind of seeing things.
it's better to have them on the chart. And they all have drawing tools. You can do it. FX Solutions they've got some difficulties with their drawing of lines, but that's supposed to improve. And by the way, wherever you're trading, if you see things you don't like, make sure you tell somebody, because that's the only way they can improve. So don't just accept idiosyncrasies if you don't like them. Okay, what would you do here?
Long.
Why?
Railroad tracks and the divergence on the MACD. Price is going down, MACD is going up, and you've got a railroad track.
Yeah. Does everybody agree?
Pivot point. Buy.
Okay, what would you do here? Why? We're in a sell area here.
Right.
We're above the main pivot point in a sell area. The bias up here is sell. And we have, you could argue that's not really railway tracks, but we have negative divergence on MACD here. See that? See the negative divergence between MACD and prices going up and MACD's going down? You can study this chart at home. This is George's. I have put a lot of words on here. It's very busy, but it explains how he uses limit orders around pivot points. And so you can study that when you get home. I never cease to be amazed when I see price sticking to a pivot point, and new people to trading, when they see this phenomenon, they say, holy cow, it really works. These pivot points are really meaningful. Yes, they are. Okay, what would you have done here? What's that? And what area are we in the pivot points? We're in a sell area, and do you see any negative divergence down here? See, Peter, you got to sort of weave the story here, and if you miss one thing, it can be deadly. It's almost like price is testing you to see if you're awake at 3 o'clock in the morning. Price, Jeff asked me the importance of this indicator. I guess I could leave this one off, but I've often thought that I guess I got this from the trading world. When you're scalping the NASDAQ, the two most important indicators are price and volume. And I've always thought that price was really an indicator unto itself because it almost has a mind unto its own at times. Here's an example of different formations. You can read at your leisure. Okay, ladies and gentlemen, what would you have done here? We're in what area? We're at S1, which is a buy point underneath the central pivot point. We've got a hammer. Okay. On this chart, I've summarized, Peter, this might help you when you're trading. I think you should have 4 things in your mind at all times. You should be thinking about unusual bar patterns. You should be thinking about MACD divergence. You should be thinking about how price is behaving around pivot points. And you should be looking for trend line breaks, channel breakouts, chart patterns, and so on. These things should be always, you might even want to have a cheat sheet on your monitor. You're constantly asking yourself, what do I see? What do I see? What? But reminding yourself to be looking for these things. Okay?
Actually, I thought of putting together in a Word document, printing it out, maybe 4 or 5 things to look for, and when I get ready to do a trade, to check those boxes and how many of the 5, if there are 5 of them, how many, do I have 2, do I have 3, then agree, and then pull the trigger if that's what I should get.
It's the old green light story. If you're in your garage, how many green lights do you need to go to work? Well,
Exactly.
not all of them, but some of them. What we're going to do now is we're going to go through 3 months of trading examples. So we're going to go through January, February, and March. I'd like to do this rather quickly because the success of a trader is based on seeing things quickly and reacting. So I'd like to fly through this as quickly as possible, and I want you to tell me what you see, okay? But let's not dwell too long on each chart because let's just pretend that we're trading. Okay. Okay, we're in January now, and just a point of reference, this was where the commercial traders signaled their long position. This is January the 2nd of this year, and What do you see here? A hammer here at the pivot point. A bottoming out process here. Look how it's sticking to this pivot point. We've got this hammer sticking out like a sore thumb. Does everybody know what the law of inertia stands for? It applies to the Forex in that the law of inertia says that when something is in motion, it tends to stay in motion until something stops it from being in motion. It applies very well to the Forex because when currencies trend very well. Okay, what would you have done here? Price is punched through this pivot point here heading north, and my reading is that it's going up. Railway tracks, okay. Going down, bingo.
When you see price punching through R2 and S1, say in a 60-minute chart, can you go and check the daily chart and see where the pivot points are?
You can do that, but on this chart here, you wouldn't really have to look at any other time frame because I think it's pretty obvious what price is going to do here. Would you agree or disagree? I mean, you don't have to. You could look at the 1 hour chart to see if you have a similar. More than likely, if you looked at the 1 hour chart, you might see a railway tracks there as well, or some other bar pattern at this hour.
No, I meant when the price punches through S1, below S1 and above R1.
Right.
So yeah, at that point, say for example, like Friday on 1 hour chart, the price is well below the pivot point.
The lowest pivot point? Yeah. So what's the question, Murthy?
So at that point, how do you trade? You go and see the pivot points on the day graph, see where.
You can use the weekly pivot points.
Weekly, okay.
Yeah. You can read this at your leisure. This just explains, for those of you who don't know what the interbank data feed is, this is what it's all about. So you can read this at your leisure at home. More divergence. I think we've drilled that all day long. Is the US dollar going to crash? Although I think the US dollar has more downside potential, it's not going to crash because it really is the medium of exchange, the major medium of exchange. All commodities are priced in it. Many countries have dollarized. It's the currency of the underground economy. Even criminals do deals in it. So the US dollar is not going to collapse. It's not going to collapse. Okay, what do we see here at this buy level? More information on the US dollar. What do we see here? We had a break in the pivot point going down right here.
Yeah.
What do you see here? A hammer at S1. Now, some technicians would take me to task on that, and they'd say that's not a hammer. Well, you call it what you want to call it, but I'll call it a hammer. As far as I'm concerned, that's a shades of gray hammer, but I still choose to call it a hammer. This one's not too obvious. We've got a bit of a topping out process here in between pivots. It retested the high right there and it failed. Here's an example of trendline breaks. I think Devi and I have agreed that trend lines are very important. On this daily chart, when this trend line was broken, you can see that going short, taking a short position on the euro in here was a smart move. Another place to go short was when this low over here was taken out. When that low was taken out by this low right here, that was another place to go short. Again, MACD divergence. Now, what do you see here? Remember, I told you show this to a child and the child will tell you what the trend is? What's the trend? Up? Where would you assume price would go from here? Until?
Breaks the trend line.
Bingo. We've talked about, we're going to kill this divergence to death today. Ah, look at this huge hammer. What do you think you would do? Here's an example of the different bar patterns that we've discussed. What would you do here? Railway tracks. I've talked about Novartis before today. Reinforcing negative divergence. What do you see? What do you see here? Bingo. These are the 4 things you should keep in mind. Has your big flick gone on yet? What I mean by that is air traffic controllers, when they're trained, their superior keeps asking them, has your big flick gone on yet? Like, do you know what you're doing? Okay, so. People in the stock world don't know what they're missing, because if they're trading something like Amazon, the average trading range as of October 31st last year was $1.93. It was 10:30, January 29th of 1999. It now takes Amazon a week to cover the same amount of territory that it did back in the 1999 period. This is my favorite trader. This is probably the best trader I've trained. I'm so proud of him. I wish I could mention his name. He learned how to trade after 6 weeks. The pivot numbers are very effective. I can pick the high and low for the day extremely accurately, and I therefore trade the range very effectively. In fact, I refuse to believe it is this straightforward. I simply find it difficult to believe what is happening in terms of how this helps you to gauge price movement. Since you have been training me upon purchasing your program 6 weeks ago, I have been averaging 250 to 350 pips per week simply by adopting your strategies. He's not now gone on to do that on a daily basis. My favorite animal is a turtle, because they're slow, they're methodical, they're plodding, and I think that there are some of those attributes that we should apply to the trading world. We talked about this slide before in terms of how to read trend lines. What do you see here? Hammer and divergence, right? Avoid negative people like the plague. They'll drag you down. I like this one. This is Joe DiNapoli's quote. No vision, no victory, no guts, no glory, no plan, no money. What's love got to do with it? Well, we talked about passion earlier. If you don't love this business, don't do it. It'll eat you alive. Because you'll have some bad hair days. Losing money is a terrible experience. It's worse than making money, obviously. It's twice as worse. So if you have bad hair days and you don't love this business, it'll just eat you alive. So learn to love your losses and learn to love this business. Sonny Harris, a great example of what it takes to succeed in this business. I think I said this before, so I won't repeat it. I talked to somebody earlier about there are instances where you could get the open, high, low, close from the daily chart at the platform that you're trading on. I didn't dwell on that today because I don't trust all platforms. I don't trust the daily charts to give you the right information. Like what I'm talking about is, for example, at Commerce Bank, if you go to the daily chart and you click on the rightmost bar next to the one that's just forming, it'll give you the open, high, low, close for the last 24 hours from midnight to midnight. And it's beautiful. It's perfect. It is 12 to 12. Some platforms, you click on that bar on the daily chart, and it's not midnight to midnight, although it looks like it is. I just don't trust it. That's why I dwelled on using the 1 hour chart. 7 out of 10 widgets. What I'm saying here is that some people get out of bed in the morning, and they go to work, and they say to themselves, I'm going to make 10 widgets today, and when I've made them, I'm going home. They make 10 widgets, and they're home. In this business, you may only make 7 widgets and throw 3 away. Some people can't handle that. They want to make all 10 widgets. People are paranoid about losing money. They're paranoid about breaking widgets. You can't, you must be able to handle losses in this business. Okay. Would you all agree that the price is going down? This is worth reading. This testimonial is from Mark Van Grunen in South Africa. A friend of mine by the name of Dr. David Paul subscribed to your trading system. He is a very astute trader and is arguably the most knowledgeable trader I have ever met. He trades almost any market, mostly Forex, with outstanding results. He phoned me to inquire about your system as he saw my testimonial on your website. I only gave the best, as I truly believe your system is fantastic. I have used your system to trade just about any market from DAX, FTSE 100, Dow, SP 500 futures, stocks, and the Forex market. Your system worked on all markets. In fact, I showed a friend of mine not so long ago, and up to today, he still thinks I performed some magical trick on him. I never used any indicators. All I did was plot the lines, and the reversals took place exactly on the numbers. The uncanny thing is that the numbers were obscure, such as 1.7686 and 1.6988, and not round numbers. We even tried using it on a very short time frame, such as the 1 minute data, which then blew him totally away as the candles closed exactly on the numbers. If you have any skeptics out there, please refer them to me. My email to you is simply to say hello and all is well on my side. Fondest regards, Mark Van Grunen, South Africa. Getting back to your point earlier, Peter, I sometimes find that we can become myopic when we're trading. We can sometimes be looking at a screen and we get too close to it. And sometimes what I'll do is I'll step back, I'll get up off my chair, and I'll actually stand back from the screen and I'll just study it like this. The screen is way over there. Just look at it and think about it. And what do I see? You know? And you'd be surprised what you see that maybe you don't see when you're sitting in your chair. So just something to think about. Did you see that head and shoulders pattern? Did you see that triangle? These are all important clues in the game of Forex trading that will kill you if you don't see them, because price will get you big time. Aha! You didn't see the triangle. Okay, what do we see here? Trading currencies is really all about pattern recognition. And Anthony Robbins also says this. He says two things that I like, amongst other things. Massive results come from massive action, and repetition is the key to success. The way he has trained basketball players to become ace basketball players is because they repeat it over and over and over and over and over until it's whomp every time. Over and over. Some people can't do that. You've got to really, when you get these tapes at home that we're going to send you, you've got to go over them and over them and over them and over them and over them. If you love the business, you'll love to do it. If you don't see something to do, don't do it. I don't know if well, it's true. I had a guy call me from Australia. I think I gave you this example before, but I'll repeat it. I actually told somebody at lunchtime. He was arguing. It was one day this past week, and we were trying to decide whether to take the trade or not. And I wasn't going to take the trade because I said, quite frankly, he was trying to argue that it was MACD divergence. And I said, well, it's kind of MACD divergence, but it's kind of not MACD divergence. I mean, you're really pushing the envelope here. You're looking too hard. I said, why don't you just go golfing? It's not a good day to trade. And it wasn't. It was the only day this week that wasn't a good day to trade. So don't try to force it. If it's not there, it's not there. I'd rather go with really crystal clear signals. We've seen some of them here today. If you don't see any, then don't do anything. But some people can't handle that. They've got to do something. Weekly pivots we've talked about. %50 of trading is psychological. You can get to the point where you understand what to do, but can you really do it? And that is a very complex thing. I can't really help you with that. This is a game of confidence. And this may not seem like an appropriate statement to make, but I read a lot of motivational stuff. You can't motivate me enough. If you tell me about a motivational course, I'll take it. You've got to be pumped all the time. You've got to be up all the time. You've got to think positive all the time. You've got to avoid your negative neighbors. If you've got any negative friends, get rid of them. This is a business about constantly being positive and pumped.
How
So,
about negative wife?
get rid I'm glad that's your problem, Murphy. Just don't talk to her about trading. This is why I say that if you have been a successful chiropractor or a successful business person, you can copy that success into trading because you know what it takes to be successful. You'll go through the motions, you'll hang tough, and you'll do it. I can tell you people that I've tried to train that didn't make it because they've never tasted this success. I can't fix that for them. I can't give success to people. Success comes from being a pit bull on a pork chop, working like a dog. The lady that lent us the backup projector for today is a multi-level marketer. Now, I don't like multi-level marketing. She is very good at it because she works like a dog. She crawls over crushed glass to make sales. She could be a good currency trader because she has that gut instinct that I've got to succeed, that burning desire in the gut to succeed. She could do this if she liked it. But I can't make people be successful. Is this idea of M1, M3, say hi to Mercy for me.
I will.
Okay, we'll
Nice
talk on the
meeting you
phone.
all.
Is this business of M1, M3, M2, M4 fuzzy?
On your website, you mentioned about forecasting prices accurately from the futures data. Is that what you're referring to, the COT?
When we talked about COT and you fell off your chair, that was futures
That was
data.
the one that-
Yeah, yeah.
Sorry, you said like if the last day of the trading day was like M1, M3, then the next day should be the other side.
No. Basically what I'm saying is that if the, when when we went to that chart where Don corrected me in terms of the open was the wrong number, when you grab the open, high, low, close from that chart, from the 1 hour chart, if the close is less than the open for that particular set of numbers, then your next trading session is going to be M1, M3. In other words, the low is projected to be M1 and the high is projected to be M3. If from those numbers you see that the close is higher than the open, then the next day is going to be an M2, M4 day. Okay. The low would be projected at the M2 number and the high would be projected at the M4 number. That's all I'm saying. Okay. What do we see up here?
Actually, you should cover the MACD also, then you can't see anything. But
Well,
you can cheat there. You can cheat by looking at MACD going down, so you should cover that one too in your slide.
okay, would you agree we have a double top up here?
Yeah, double top.
Okay, sports fans. What I see here is price is in some sort of a channel, at least it's channeling across. And it's a question of, it looks like price is breaking out of the channel here. This is a news day. This was the euro reacting to news.
Sure looks like it.
What would you have done here?
Go short, double top.
Got a trend line break there, right in here. I only include this chart because Mike Clements is a pastor in Texas, and he's taken it upon himself to become the MACD expert on the planet, and he loves MACD divergence, and he constantly sends me these examples, and I love him for it because it shows me that he's deadly serious about this business. He's shown me some things I didn't know before. Okay, we have here railway tracks at M2 below the pivot point. Buy. Now this is an interesting chart here. We had a bottoming out process on the daily chart, followed by an uptrend line here, a double top up here. And I believe that was where the euro ended, right about here. Okay, what do we have here?
Channel.
We got a channel. We got a trend line going down here. What do you see here? What do you see up here? Spinning top up there? Yeah. There you go. Okay, what would you have done here? We did this example this morning. You should remember this one. This is remember we talked about the 1, 2, 3 phenomenon this morning, where price tested the high up here, the number 3 point, and you would sell it on a break from the number 2 point. This is an example of an uptrend line on the daily chart. As of this print, that was an uptrend, and by connecting those two cycle low points. What do we see here? Here we've got a channel across here. Even though that hammer, let's just see what did happen. Price eventually did break out of that channel and go down. And that hammer didn't do anything. Okay, that's an example where a hammer that should have done something didn't. It wasn't at the end of an extreme run, but the thing that finally broke price was this break of the channel. We talked about this example this morning with the triangle over here, followed by the channel. Price eventually collapsing. Here we have a spinning top at a buy point. I talked about this example earlier in terms of the gentleman wanting to buy here at a resistance level. We talked about trend lines. This looks like we've got a bit of a trend line breakout here. Price is going south, testing M2. Here we've got a hammer at the end of a run, and we'd be looking for a trend line break. We talked about this earlier in relation to news. What would you have done here? That was a good day to trade. That was a gift. That was a gift trade. This is the example I used earlier where when you're putting your stop on, it may be risky to put your stop on the other side of a hammer like that because it's such a long hammer. But it's such an obvious trade that you wouldn't want to miss it. We talked about this one earlier this morning in relation to news occurring.
But is it not also because of the double touch and the pivot point?
Here?
Yeah.
Well, we've got we've got a test right here going on, and we've got some news. We're waiting for news at 8:30 here. So we've got some indecision going on here. And then the news that came out was the news about the ECB not lowering the rates. And so the euro reacted as you would predict. It went north again, okay? Quite dramatically so. Why would the euro, if the news had been that the interest rates were going down, that the ECB were going to lower rates, what would the euro have done? There you go. Okay, what do we see here? Negative divergence down here. Here we've got positive divergence. We've got a hammer. We've got a trend line here. This slide was in relation to the idea that price tends to hiccup midway between pivot points where the distance is rather large. We talked about this one earlier in relation to this down trend line here coinciding with this exhaustion bar. And we've seen this slide before, and this one. Yeah, this is the one we talked about this morning where we had this symmetrical triangle in an uptrend and price headed north on the 1 hour chart and also on the 15-minute chart. Okay, what would you have done here? This day was a day we talked about this morning where this was a bit of a fake out where we had a sort of a quasi head and shoulders pattern in here and it would look like price was going to collapse. But then we had news coming out at 8:30 in the morning that was euro positive. And of course price went up. We talked about this one this morning in relation to the 1, 2, 3 topping process. This one is an example of a trend line break. What we would be looking for here would be, if you drew a trend line here, between these cycle lows, you'd be looking for a break of that trend line going south. And here we have a bit of a trend line break, although a small run. Another example of this is the midpoint between two wide-ranging pivot points, which becomes a strategic area where price tends to hesitate at times. Here's the kind of railway tracks you'd like to get all the time. We're back to the euro daily chart where price went up and then got hit on Friday. Okay, what do you see here?
Negative divergence.
Spinning top and negative divergence. Here we've got positive divergence. Okay, on this note, obviously the more black and white a pattern is, the more powerful it is. If it's a spinning top and it really looks like a spinning top and it's a rather dramatic spinning top, then so much the better. In closing, trading is shades of gray. We talked about the 5 indicators that you should be looking at. And we talked about how many signals you need. We talked about the law of inertia. I like this comment here. The master musician knows the hours, days, and months of grueling practice and self-sacrifice that precede the 1 hour of perfect rendition when his mastership is applauded. Same with trading. There is no substitute for hard work and study. If I had 8 hours to chop down a tree, I'd spend 6 hours sharpening my axe. Abraham Lincoln. This is a testimonial from Vincent Moriassi. Firstly, I'd like to take this opportunity to thank you for your ingenious yet simple pivot point trading strategy. I bought your book, and after going through it, I got a lot of information and techniques. I started trading the Forex market January 4th, and in my first 2 months, I really did very poorly. But after reading your book and your daily Forex examples, I am proud to say that you have improved my trading greatly, especially with the use of MACD divergence. If you have any questions after today that we didn't cover and you'd like to send in your questions, you could get us at that email address. And I would encourage you to share your email addresses with other people in the audience who can be helpful to you as well. Being religious, I thought I'd end this session with a chapter from the Bible, Galatians 6:9, and let us not be weary, for in due season we shall reap if we faint not. Thank you very much, folks, for coming.
Been trading for about 8 years, and clinical psychologist myself, and taught some traders myself. And I have to say, this is some of the best education I've had. I've done all the trading seminars you can imagine. Spent probably $50,000 or $60,000 on trading seminars, and this is the least expensive and the most effective one I've ever been at. I love Peter's work. He's a really generous man, and has a trading system which I think anyone who's really passionate and dedicated to trading would be able to learn and apply within a month to 2 months and be very effective at trading.
If anyone's interested in learning how to trade the foreign exchange market, I think it's very important to have a strategy and a system that you can employ time and time again. And I'm confident Peter's system is one way that you can use to do that and trade the foreign exchange market. It's not rocket science, and it's not some academic ivory tower concepts. He breaks it down so I believe the average everyday person on the street can understand it. And I'm looking forward to applying it and being able to trade for a living.
His teaching material is very easy to learn. He's a good teacher. If you want to get into Forex, I just highly recommend that you get his book, get his course, and if you just do it exactly as he says, you can't go wrong. I've been doing Forex now for nearly a year. In the past 4 months, he's been on Peter's system, and it's really got my confidence back in Forex, which I lost 6 months earlier, as I wasn't doing his system. So it's a very good system.
I've been studying with Peter for about 6 or 7 months. I got his book, I got his course, and I just found he had the most straightforward and easy to follow method. And if I would just do his method, I would do well. I've had a live account for about 3 months, and it's been the first time that I haven't lost money doing something like this. And I also felt like the seminar that Peter put on today was fabulous. He really drove home the points that he talks about in his course. He really makes sure that you understand all the points. And the people that were here, I feel like I have a lot of resources to go back and really some good solid people that trade his course and make money doing it. So, and I also felt like one of the reasons I came here is because I feel like I've gotten so much more from Peter than all the money I've spent, which is really not that much money, with the course and with today's seminar. So I'm very indebted.
In my experience with trading equities, I also found that psychology is at least half of what you're doing. And I think he said it best when he said that you have to love what you're doing. And if you love what you're doing, you're passionate, the money will come. If you chase the money, you're in trouble. So I agree with his philosophies, I agree with his teachings, and I happen to think he has his priorities right. So it was really the total package that I enjoyed.